My path to stable earnings from trading was not easy at all. In the 7 years of my career as a trader, I've gone through almost every possible mistake and basically completely wasted the first couple of years chasing fast money by following fake gurus and stuff like that. So I decided to make this video specifically for beginners and answer the question, how would I start my trading career if I had to start over right now? Perhaps the first thing I would like to note is false expectations. As beginners, we look at trading too optimistically. The ability to turn $10 into $1,000 at the touch of a couple of buttons is intoxicating, and it creates false expectations and an illusion of simplicity. This also applies to this video. Do not expect that after watching it, you will instantly become profitable. Sorry, but this will just never happen like that. To become a profitable trader and start earning money, you first need a solid foundation of knowledge that will become the foundation of your future successes. And it is this foundation that I will try to lay in this video today. Today we will analyze how binary options work, everything you need to know about broker gauge platforms, types of markets, how the price is formed, and what affects its movement on the market, how to make the binary economy work for you and not against you, analyze indicators and price action, principles of money management, and of course how to close and test a trading strategy. And at the end of this video, I'll show you what strategy I would use to start trading myself as a beginner. I know it sounds like a lot, and in general this video will be very intense, but still don't forget to like it up, subscribe to this channel, ring that notification bell. But for now, let's get started. Without a full understanding of the basic principles, we won't get far anyways. So let's start with the basic question. Binary options. What is it anyway? At its core, a binary option is a contract very similar to regular bet. As a trader, we try to predict whether the price is going to be higher or lower than the current point after a certain time. And unlike Forex or crypto trading, we don't care how much the price will rise or fall. The main thing is to guess the direction of the price movement itself. And in case of a win, we get a fixed profit that we know in advance, and in case of a loss, we lose the amount of the bet. Alright, so let's look at the real example. We're opening broker products, and this is the place where we can open our deals / bets for growth or drop of the price on certain currency pair. For example, right now we are on Euro GBP currency pair, and the chart that we see right now shows us the movement of this currency pair in real time. Still, what do we need to know what do we need to read? First of all, we need to understand what this chart means. We see red and green candlesticks, and first of all, let's talk about them. Let's choose one candlestick, for example this red one, and talk about it. What does it mean? What does this red candlestick represent? It shows us the movement of the price at certain point of time, and this certain point of time is called time frame. We can choose it right here. Right now we have 1 minute time frame, and that means that each candlestick shows us movement of the price in 1 minute. So this candlestick showed us movement of the price at 10:24 a.m., this one 10:25 a.m., and so on and so forth. Okay, so we can change time frame to like 5 minutes, for example, and in this case each candlestick shows us 5-minute time frame movement. So if we change it back to 1 minute, we can see 5 candlesticks, but on 5-minute time frame 1 candlestick. Easy peasy lemon squeezy. All right, now we know that. Let's move on to something else. Also, we need to understand the structure of candlestick. If we're talking about green candlesticks right now, it has its body and shadows like any other candlestick. The beginning of green candlestick is at the bottom where the price starts, and at the top, this is the end of the candlestick where the price was closed. So the minute has ended, and the next minute started when the price dropped. And shadows also are on the candlesticks. They are showing minimum and maximum. The price went a little lower, as you can see on this green candlestick, but then it grew, and then it was corrected and closed a bit lower. With red candlestick, it's a bit different. So the top point, this is the beginning, and the bottom point, this is the close of the price. And the shadows also shows us maximums where the price grew, and then it dropped lower, and we have the shadow lower. It was corrected and closed a bit higher than the shadow. Also, we are going to talk about how we can open the deals. As you know, the deals are opened for a certain period of time. So for example, right here, we have 1 minute and this is called expiration time. And expiration time is basically the time for which we want to open our deal or bet when the price is going to be higher or lower. So if we're choosing 1 minute, we're opening a deal, which is going to sound something like that. I believe that in 1 minute, the price is going to be higher if we're choosing up or lower if we're choosing down. The price is going to be lower or higher than the current place. Expiration is chosen by you. We can choose 3 minutes, for example. Then we're saying, I believe that in 3 minutes, the price is going to be higher than the current point or lower than the current point. So let's get a little example. We're going to open one deal for 1 minute. Let's analyze it. Let's imagine that we have this like some sort of level here and maybe the price is going to go higher. There is no analysis right here. I'm just guessing, So we're opening a deal for $1. What we get? We have a situation where we know in advance our potential profit or potential loss. Our potential loss is going to be $1. So if this deal is going to be closed in red, the price is going to go lower. In this case, then we're not going to get any money. We're just going to lose $1 that we betted. If the price is going to be higher, then we're going to get fixated payout $1.90, from which $1 is going to be the dollar that we used for a bet, and 90 cents is going to be our profit here. So the payout is 90% on this currency pair. Let's wait for the end and see what's going to happen. All right, in this case, we see that the price grew higher and we got our 90 cents in profit. But you also need to understand that you shouldn't be guessing, because your win rate is going to be 50%, like half of them are going to be closed in black, half of them are going to be closed in red, black meaning where you get the money. So in the long run, if you're going to do that, you're going to lose money because the payout is lower than 100% here. And this is binary options economy, which we're going to talk about it a bit later. But for now, we need to understand what is binary options markets and how they work. In fact, when someone says binary options market, this is not entirely correct, since binary options are not a separate market, but simply a type of trading in which we know in advance the potential profit or loss and open a deal with a fixed term. And the market itself is the same as in Forex or cryptocurrency trading. For example, here we opened the deal on currency pair Euro-GBP. What is Euro-GBP currency pair? This is ratio the price of euro to British pound. So this is typical ratio of two currency pairs. This is a typical Forex currency pair where you can work on any Forex exchange plate. So for example, Euro-JPY is the same. This is ratio euro to Japanese yen, right? Also, we can choose any other currency pair like British pound to Japanese yen, Canadian dollar to Japanese yen, Canadian dollar, so many others. So those are typical currency pairs, and this is a typical Forex market, the same market where all the Forex traders work. If we're talking about crypto, same thing. We have all the same cryptocurrencies. The only thing is that we have only OTC currency pairs, which is not really good, but we'll talk about it later. Also, we have commodities. We have gold, we have silver, crude, and others. And we also have stocks. All the same things, all the same stocks that you can find absolutely everywhere. So let's get back to currency pairs and let's talk about OTC currency pairs. My favorite. So OTC. If you're looking at normal currency pairs, they are actual existing currency pairs. OTC, they are simulation of real market. They are not real. So if we're talking about Euro-JPY, normal Euro-JPY, you can go to any Forex and you will see the same thing as you see here. But if you go to USD IRS, you're not gonna see the same thing, because this is not real price of this currency pair, because it's OTC. This is the simulation that brokers gives you. Why they do that? There are a couple of reasons. One of them is because real currency pairs are not available on the weekends and at night, and for people to still work and live, many brokers add this simulation market. But working with them is super risky because basically all of them are not real, as I said many times, and you need to understand that this price doesn't have anything out of reality. I have a video that I think you need to watch if you are a beginner. It's like an old one, but it's still the same thing. OTC currency pairs still exist, and I still think that this is the biggest scam on binary options, and you should never ever work with them. Mustn't. So if you are watching someone who's working with OTC, ask them, why did they do that? How can they predict the movement of the price of the currency pair that doesn't really exist? Ask them that question. And I think that's enough of the explanation. All right, when we talked about binary option market and Forex market is basically the same, but the style of trading is different, but the market is still the same. We can now talk about another trading platform, which is going to be a bit more useful for analysis of price movement. Right now we have Quotex with EuroGPY. Let's go to TradingView, and here you see that the price is moving the same way. This is the same currency pair. There could be a little bit of difference because there are different price providers, but the globally price is going to be the same. There's going to be just a small difference there, sometimes, not always even. And why are we going to TradingView? This is a charting platform that gives us an ability to look in the past and see how the price was changing at some point in the time. We're going to go back to this platform because we're going to be testing our strategies here, but now I'm going to use it for a different reason. I'm going to show you how the price is created. We can go a bit further from the chart and see what happened to the price at some but at some moment. So for example, right here, what do we see? We see that at this point in time, the price was showing us growth. Let's get a bit closer. Right here we see from 10th of July from 3 a.m. the price started moving upwards. Let's answer the main question here. Why is the price moving upwards or downwards? There are a lot of factors, but globally, the basic factor you need to understand, this is supply and demand. The higher the demand, the higher gonna be the price. So for example, right here, we see that people started, big players started buying this currency pair. So the price started moving upwards because we get more and more buyers, and it was happening and happening and happening. It practically ended, let's say right here, and those who was buying it for that lower price, here they decided that that's enough. They're gonna sell the position here, and the price started moving downwards. Right? And the period when the price is growing means that the buyers are dominating. If the buyers are dominating, this is bullish market, right? So the buyers, they are bulls, the sellers, it's a bit of a different story. Anywho, after that, we have more or less a stable situation between buyers and sellers, and at some point the sellers started dominating. We see that the price started dropping actively, and this is bearish market, the market where sellers are dominating, and that is why price starting to drop. And those patterns are going to be happening all the time. So for example, right here, the bears are dominating at some moment. And right here at this point, the buyers say, oh, that's a good price, I can buy some. And a lot of people buying it, and it's a bullish market at this moment. And the price is growing, obviously. So this is called trend. The market consists of uptrends and downtrends and consolidation periods, for example, right here, where the price is somewhere in the middle of all of them, like a weird corridor, not dropping and not rising drastically. By the way, before we move on to further analysis of fundamental concepts, I would like to remind you that if you want to continue to delve deeper into the topic of trading, our free trading academy can help you with that. There you will find not only in-depth exclusive lessons with detailed analysis of trading tools and strategies, but also receive constant support from me, as well as access to student chat in which hundreds of you like-minded people study and work side by side. And answering the question, would I like to be in academy as a beginner? The answer is definitely hell yes. To get free access, just text me on Telegram. You can say, I want to study, and start today. The link to my Telegram is, as always, in the description under this video, and the nickname is on the screen. Beware of scammers, because this is my only Telegram account. So, having this basic understanding, let's answer the question, what do you need to start making money in trading? Or, in other words, let's see how the binary options economy works. We have already discussed that if opening an infinite number of trades at random, our percentage of successful trades would be 50%. This percentage is called the win rate. So with a win rate of 50%, we will go into negative territory since the payouts we receive for successful transactions are below 100%. And let's say that after opening 100 deals for $10 with an average payout of 85%, we will play 50 times for $8.50, but lose 50 times for $10. And in total, we will win $425 and lose $500. Basically losing $75 in that. Accordingly, we get a situation in which, in order to earn more money, we must win more often than we lose. But how much is it? What is the necessary win rate for break-even? You will be surprised, but it's only 55%. If you can increase your win rate but only 5%, that's going to be enough to trade in a plus. With 100 trades, you will win $8.50 55 times, receiving $467.50, and lose $10 45 times, and the amount is going to be $450. The difference of those is going to be $17.50, and it's going in your pocket. At this stage, the guys who are like me came to binary from Forex, they are blinking in surprise, because there 50% of win rate is already an unheard of luxury subject to the best traders, and 55 is just sky high and unreal. But it's really important to understand that in Forex there is a completely different risk to profit ratio and probability of winning. And it is possible to be profitable in Forex with a 30% win rate, but it's wildly difficult since for this you need to catch a very large price fluctuation, unlike binary, where the first small peak is enough to get 85% profit from your transaction. Well, let's get back to the topic. Now we know that in order to trade in the plus, we need to somehow increase the chances of winning from 50%, which is random trading, to 55%. And how the hell do we do that? Because this is where the whole headache begins. We need to learn how to read the market and predict its movements. And for this, we need a strategy assembled from suitable tools. And we have a lot of those tools, but how to choose the right one? Globally, in my understanding, there are 4 main groups of strategies that can allow us to start earning. Let's go from the worst to the best in my understanding. Number 1, insider trading. From the point of view of profitability, this is the best option if you know that the bank will open a large position at 10 a.m. and then by opening a position at 9:55 you can make a fortune. There's only one disadvantage. It is so illegal to do that, and of course, if someone on the internet offers you such information to buy, this is obviously a scam. Number 2 is news trading. By analogy with insider information, here you can predict the movement of big money in advance. For example, if the US Congress is scheduled to release an important news about Bitcoin in the evening and you know the situation thoroughly and you can predict that announcement will be positive, then you can open an upward position in advance. The only downside here is that such forecasting requires tremendous experience and a very deep knowledge of politics, which I personally do not have, so this option doesn't suit me. But in general, according to news trading, it's more profitable to work with Forex, since price movements can be huge and there is no point in limiting possible earnings with a payout only 85%. Now let's talk about the 2 best options in my opinion. Number 1, indicators. They are a technical tool that processes information from charts and present it in a more understandable form, allowing traders to identify trends and determine overbought and oversold levels. And the second one, it is a price action. And this is an analysis of historical price data that allows you to determine the key levels where the probability of price reversal is most likely. Personally, in most cases, I use price action as my main tool, trading according to the trend or the levels of support and resistance, combining it with indicators to obtain additional confirmation. If we're talking about indicators, globally we can divide them on two big groups. First of all, you open them right here. These are indicators, trend indicators, and oscillator indicators. So trend indicators, you can understand that basically they help us to find the direction of the trend. For example, alligator, it has 3 moving averages with different settings and periods that allow us to see in what trend the price is currently in, showing us a slow, fast, and medium trend. So if the lines are being chaotic, there is no really trend. But when they are in the same direction, for example, right here, it is an uptrend and we need to open deals for an upward trend, logically. Also, we have oscillator indicators. My favorite one is stochastic. All of them, they work in a similar motion. This indicator shows us overbought and oversold areas. So for example, here, the price is in the level of being oversold. It's lower than the level of 30, and we have a crossover in stochastic oscillator, meaning that the price is probably going to rise, and the price actually rose at that moment. A lot of people use one specific indicator like a full strategy, basically looking at stochastic, opening deals for an upward trend, seeing crossover lower than the level of 30, for example, there, right here, and I'd say somewhere here as well there was this level. But of course, this is not the best strategy, or using only one indicator, this is not enough to get a full analysis and a full strategy that will give you stable and good win rate, because indicators, they still showing you what happened with the price in the past, interpreting it in a visual form, helping you to like see this overbought and oversold areas. So for example, right here, yes, we would say there would be one really good deal. We can add alligator and see that right here there was a crossover of all the lines of alligator, showing us that there is a new trend forming. And also we see that stochastic also shows us crossover. We're combining trend indicator and oscillator indicators, stochastic and alligator, and somewhere here we would get a great signal for an upward trend. And this kind of combining of indicators, this is the base that we are going to be creating our strategies, and you should be doing too. And of course, like all of the testing, everything is going to be something similar like this. Well, let's figure out how to test and select strategies using the example of strategy that I would start trading with myself. My basic strategy consists of 2 elements, a trend line and already familiar stochastic indicator. With a simple rule, if the price reaches the trend line and the stochastic gives a signal, I open a deal. Righty, right now I have trading view, just to test, just to explain. It's better to use charting platform, but don't worry, we're gonna get back to Quotex and open a couple of real deals, but with the rules of strategy, I invite you to see them here. So my setup for a deal is a trend line. So I need a trend going downwards or upwards. Right now we see an uptrend. The price is updating each minimum. Each one is higher than the previous one, and the maximum is also higher than the previous one. In this case, we can draw a trend line. Trend line, it's a line that connects the lower points of the trend. If we're talking about uptrend, we are connecting all the minimums of the price on that trend. So when the price is going to go back to this level, most probably there is going to be reversal. Let's see what's going to happen with the price next. We see that the price is getting closer to our trend line. Let's get it a bit slower. Right here, we see that stochastic already is lower than the level of 30, and most probably the price is going to rise, but we still do not see confirmation on the level of candlesticks. We see that the price was going down, but we don't have an impulse that the price is most probably going to rise. Let's see what's going to happen next. And next candlestick also is not showing us anything that we need, but the next candlestick is already showing us that there is some sort of impulse for growth. And also we see that the lines of stochastic are going back to normal zone, and most probably there is going to be the growth of the price because the price went out of the level of being oversold. And in this place, I can open a deal for 3 minutes. This is how I usually work, 3-minute expiration time. And in this case, the deal would be closed in black, meaning we are going to get money and we would get 85% of profit. If we're talking about downtrend, we see that it works the same, but vice versa. We see that the price creating our lower highs and lower lows, and we are putting our trend line on the top, connecting all the maximum of the prices and waiting for the price to go back to it. Right now the price is quite close, and let's see what's gonna happen to next candlestick. And next candlestick actually touches our trend line and it's going down. Also, we're looking at stochastic, and we see that stochastic also gives us a crossover higher than the level of 30, and this is a great sign. With this confirmation, I'm gonna open a deal for 3 minutes. Let's see what's gonna happen. Let's see what's gonna happen. So the price danced around, but we still got our money. Of course, you shouldn't expect phenomenal result and 90% win rate from such a simple strategy. This is simply unrealistic, but even that was enough for me to break through win rate above 55% and finally start earning. Once you have chosen a strategy, you shouldn't immediately run to brokerage platform and start trading with real money, because even for experienced traders, every strategy is tested and practiced. There are 2 types of strategy testing. It's a back testing and forward testing. For back testing, we need something like TradingView. There is also free go charting thingy, but that doesn't matter. We need to have the ability to go back away from the chart, look in the past, choose some sort of time period, and then from that scroll through the chart and find the patterns that we are interested in. So for example, right here, the price would go according to our deal. No, it wouldn't. We see that the price broke through the trend line. Let's continue here. For example, we can choose a downtrend. So it looks good. Could something happen there? And I would say somewhere here, or maybe on the first candlestick, you would get the money, but still the deal would be closed in black, meaning we're gonna get the money. So that's how you are doing the back testing here, just scrolling and looking at the past and looking at how the strategy is gonna work from the past, not losing any money, and you're gonna see all the patterns, all the setups that you want to work with. You are testing them and just, testing, looking, getting more knowledge. You're not risking with real money and seeing how it's gonna work and if it's gonna work for you specifically. And when you're done with back testing, you can go to forward testing, and it happens already on a broker's platform. But on broker's platform, you have live account. This is your real money, but you can also have a demo account where you're not losing your real money. Demo account for me is $51,000, but initially it's going to be $10,000 for you. And that money is not real. You can lose it, you can multiply it, but you're not risking anything real. So for example, here I see a potential entry point. I'm looking and I would say for 1 minute, I'm going to open a deal for $100 going upwards. It doesn't matter if I'm going to lose or win. This is not real money and I don't really care about it. And I'm not going to be upset if I'm losing it. If I'm going to lose all the money on the demo account, you can get more money, again, $10,000 on this account, so don't worry about it. And when you see that on back testing, you have 55% and more of win rate, you can move on to forward testing, get the same results, 55% or higher win rate. Only then you're opening your real live account, and only then you're starting to trade with real money and getting real money. And of course, when switching to a real account, you should keep in mind not only your trading strategy, but also your money management strategy. You cannot even imagine how many traders with a positive win rate of more than 55% are constantly losing money simply because they are not able to manage their capital. There are a lot of approaches to money management. There is compounding, martingale, the SBC method that I invented. But beginners don't need all this. To begin with, the conservative 2% rule is the best strategy. If each of your trades is open for no more than 2% of the balance that you currently have, you're automatically corrected from series of failures and you will not burn your balance on a couple of lost trades. And this is optimal at the start. Alright, now we talked about the strategy, all the rules about the strategy and money management. Now we can go to the platform, get it ready, and find deals in real time with real money on real market. So first of all, I'm checking time frame, and for me it is 1 minute time frame. That's what I work with indicators. I need stochastic escalator, my favorite. With settings, I have for this strategy, I'm not changing anything. I have the standard settings. Then we are choosing expiration time. I'm choosing 3 minutes. I'm always working with time frame of 3 minutes, and my expiration time and time frame is 1 to 3. You know, if I'm changing time frame to 15-minute time expiration. If we're talking about the investment, the money that we're using, you can put it by hand, or you can click this switch and you can put the percentages. Sometimes I use it because it's, you know, it's a bit better and more convenient. So in my case, the amount of money that I'm going to use is going to be $224 because I have 11,000 on my bank account. If you don't want to change the amount of money that you are using on each trade, you can just put it by hand and it's not going to change while you're working. And that's it. We are ready. We're prepared. We only need to find our setup, and according to our setup, open the deal up or down. This process is going to be speed up for you, and we will see each other when I see an entry point. See you later. Okay, so you're ready. Let me explain what I have here. And this is really good that this is a live market. It's not an ideal example. So let me explain. We have an uptrend from this point. This is our second touch. And on the third touch, I initially thought that the price is going to do the breakout and drop. But the price actually did the reversal a bit lower than the trend line, and this is a really good example that all the zones that we are putting on the chart, support, resistance, trend lines, those are zones, not a line. When it happens not on the line but somewhere in like really close, it is okay. So I waited for the next candlestick to get higher than our trend line, and I entered into a deal. Right now the price is moving according to my idea. We have 2 minutes and 10 seconds, and let's see if I'm gonna get the money. 3-minute expiration time, $225 used for an upward trend deal. Alrighty, so the deal is closed in black or green, whatever you want. So the first deal with this strategy is closed, getting us the profit. And I hope you understood everything, because that was so easy and profitable. Of course, profitability will not come immediately and you need to be prepared for this. But I'm sure that with enough effort, involvement, and right knowledge, anyone can achieve it. And by the way, there is another strategy that might be suitable for beginners. You can watch it right there. That's going to be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.